What's up everyone, welcome back to my weekly trading reflection video, week 20 already. And as usual, I'll go over all my trades I took this week. I'm going to go over all my trades I could have taken, I missed them, or all my wins, all my losses. Everything will be explained in this video. And then afterwards, at the end, I'll go over my trading lessons from this week. And I'm going to tell you, there's going to be a lot. It's going to be a long ass video again, but is this fun? Not really, but we have to do this because otherwise we're not leveling up on our trading journey. And so, yeah, I think this will be very beneficial if we keep doing this. So without further ado, let's get right into it. So let's go over, of course, the trades I took on Monday. On Monday, we had this first setup presenting itself. It was a really nice one, but I made some mistakes here that I should not have made, right? So what happens here is we were kind of bearish opening in on the week because I've identified this sell model on the 50-minute time frame. After we displaced through this low, this is just lowest liquidity, and I expect this low to be next because we're just in a bearish market. I expect the external to be the next big draw on liquidity, and so I was short biased and I was looking for fair value gaps, liquidity, buy side liquidity to get taken out to then form a trade. And so here, this is a model inside a model. You see this low resistance liquidity is actually just the same as this low resistance liquidity, but it's just zoomed in, right? So you want to trade models inside models. That's what I do. And so after we open up the market, here is 9:30 New York Stock Exchange open. What do we do then is we sweep this buy side inside this fair value gap, forming an SMT with ES because it didn't do that. And then afterwards, I trade the 1 on 5 minute. Let's check the 1 minute. What happened? We formed another internal small SMT here, indicating that, okay, we actually want to go lower, because if you have double SMTs, like one bigger one and one smaller one, I really like to trade these. And so that's what happened here. We respect the hour one fair value gap here, sweep the buy side. We connect this to a lower time frame sell model. This is a clean original consolidation. What happens? We have the first entry getting respected here. Then I wait. Okay, another entry getting respected. Not really an entry, but I just mean we are respecting of the equilibrium of this range, and then we go actually lower, and I respect this fair value gap, and that's when I just enter, because then I have enough confluence, because now we have an SMT, we displace lower, we retrace back to equilibrium, then we displace lower again, then we respect the fair value gap. This is just when I have enough confidence that, okay, we're starting the bearish order flow, and this is likely going to be next, right? But what happens here is I put my stop loss to break even when we were right here, and I should not have done that because the trade is still super valid. Look at this. I expected this lowest liquidity to get taken out, which it eventually did, but I was just too scared to hold my original stop loss at the highs right here. Now, if you attach quarterly theory to this, let me take a quick look on the 5 minutes. Why is this not updating? Let me go back in time. Come on, man. Yeah, okay. So what happens here? We have London session in this green box. What do we have first? The first 90 minutes of London session, New York session, I'm sorry. The first 90 minutes of New York session, we continue. So this is an X. Then we have an A, just sort of accumulation. Maybe you see this as a continuation, but I don't see this because this is kind of the start of the first side of the curve of the market maker sell model. That's why I use this as like a sort of accumulation, right? Because we're just building up liquidity right here. So I see this as an accumulation. So XAM, clear M, because we sweep the high and we displace lower again afterwards. And then the D, it really didn't give me what I wanted. I wanted this to just go lower, but it was a little bit choppy price action. It's Monday, so we did this in the PM session, right? So yeah, that's what this trade was. A really clean trade according to the quarterly theory. Liquidity, we're just really ready to go lower because of the drawn liquidity, but yeah, stop loss to break even without any actual reason. right? Now, let's delete this one and let's go to Tuesday. Let's stop the replay and let's see what Tuesday got for us. This was Tuesday. I think this was the best trade. I mean, the cleanest trade I took this week. A good trade doesn't mean big RR. A good trade means for me that I have so much confidence in taking it. That's a good trade. So what happens here is we have this SMT right here because price swept the high here on NQ, but on ES it didn't. And then we displaced lower. I still have that bearish bias because we still haven't taken out this low. And so, I mean, have we? Yeah, we have, sorry. So we have taken out this low. So my bias was still bearish because why should I be bullish if there's still no clear sign that we want to go higher? This move up, this first bounce after sweeping this, I don't trust this to go long, right? I want to still have a short bias because, yeah, there's no sweep manipulation, clear AMD, clean SMT. I want to see cleaner structure. This small SMT with the Dow, I don't think this will hold price. So I want to see quarterly theory align with the 2. And quarterly theory, what did it say? It said to me on Tuesday that we first start with an X, just with a continuation of the previous quarter of the previous cycle. And then we have an A, super clean A. So this is when I really know that the next thing we're going to do is manipulate. So that's what we do here. We have an SMT, we manipulate the highs, we go lower. Sorry. And then what we do is, yeah, I just expect the distribution to go lower also, right? Because we manipulate the highs. Okay, the manipulation already is a part of the distribution here, but then I expect, yeah, the distribution to go lower again. So that was my bias. And it confirmed it with this SMT, So Dow actually swept this high. So a lot of bearish signs. And also on ES, we dipped into this fair value gap. I don't know, it was a 50-minute fair value gap, but on NQ we didn't. So this is an SMT fair value gap, a really nice confluence, because on NQ you might say, oh, I'm not going to take a short trade because we didn't retrace back to equilibrium of the range, right? We kind of front run it, but on ES, if we go take a look on ES, price action on Tuesday, what did we do? Let me take a look right here. Yeah, this is the same range on ES. And you see on ES, we actually retrace back to equilibrium and we tap the fair value gap. But on NQ, we don't. So this means that, okay, ES is ready and we have an SMT. So NQ should also be ready. You should not wait for NQ to also take out this fair value gap. If there's SMT, there's SMT. The market is trying to like tip its hands to you that it wants to go lower. So what happens afterwards? I connect this to a sell model, right? If I'm bearish, I look for market maker sell models. As I said, ES tapped fair value gap and equilibrium of the range, fair value, SMT. Then I wait for more structure to confirm that we're actually in a sell model on the 1 minute. And so what do we get? After we have this SMT, we disrespect this 1 minute fair value gap. We use it as an inverse. So this is the first entry of the, of this market maker sell model, but I didn't trust this enough. I saw a lot of traders actually getting this entry, but I don't have personally confidence in taking this. I want to see price first going lower and then take the second entry after an SMT fair value gap again. So ES didn't tap this fair value gap, and then we actually show signs, okay, we respect this, and I just market enter with my stop here. I could have placed it here, but yeah, I want to just be sure that I'm safe. And then, yeah, this is going to be my target for a nice little 2.31R. A lot of confluence with this because we're also in the macro. So in the macro, we basically respected this fair value gap and run to liquidity. This is what a macro should do, right? It should run to liquidity and have fast moves. So a really, really nice trade. I really like this. This is going to be in my playbook. I'm going to put it there. But also aligning with the quarterly theory, of course. I don't enter trade without time being aligned with price. And so okay, we were in this distribution quarter of the 90-minute cycles, so I expected this to just continue lower, but on the 1 minute, if we go and replay back, we collect this to the microcycles again. So I hope this loads. Yeah. So again, here, this might look like an X in the first quarter of the microcycle, but this is actually an A, because what we do actually here, this is the original consolidation of the sell model. And so we are actually stacking up engineering liquidity right here that we can later take out, which we did, right? And so this actually helps me to class this as an A, because then we have a really clean manipulation, then we have a distribution, and then this should be a continuation. So that was my bias aligning with the quarterly theory. Very, very clean trade. So yeah, that was Tuesday. Really, really nice one. Then we're gonna go over to Wednesday. Let me put off this quarterly theory indicator. By the way, if you guys, a lot of people, they ask me to get the settings of this indicator. I'll just put it on right now. If you want, you can screenshot now, pause the video. I use these settings. For the opacity, I use 50% to not have like a big color on my screen. This is just all default, but yeah, that's that. So let's go over to Wednesday. Let's see. Let's delete this replay mode. What did we see on Wednesday? Okay, Wednesday was kind of a bad day. I took way too many trades. I was way too exposed in the market. And I was just trying to indicate every SMT that was present, which is not bad, but I mean, I was just kind of not trading how I want to trade, because I was not really monitoring my trades. You see very clean setups actually. If we take on the 90-minute cycles on this New York session on Wednesday, what do we see is, let me just first delete the drawings to make it clearer. How do I do this? Like this, right? Yeah. So we see that on the New York session, we first start with an X. We continue the fourth quarter of the previous cycle. Then we have a clear accumulation. Then we have the manipulation, right? We go above, we tap fair value gap right here, and we sweep a buy side. On ES, we actually went above the New York open. There was a lot of SMTs here. So if, this is what I realized, if one asset class like ES actually went above the New York open and we formed an SMT, then this can also just be seen as a nice short opportunity, right? Because you also want to always monitor the other asset classes. If that went above the true open, then you should not expect this to go above the true open afterwards, because we have an SMT also, right? So really clean XAMD, not clean D, but like we actually eventually did go lower. So a really nice trade. If I put on my drawings right here, I saw this SMT, fair value gap getting hold. I saw ES going above the true open, but NQ didn't. So I was looking for a short opportunity. I saw this fair value gap getting displaced through, then the equilibrium of this small range getting respected, and then we displace lower again, respect this little fair value gap again, and then I know, okay, we are ready to go lower, right? But then what was my problem? I didn't take profits when SMT was present, so this just ended up going back to break even and stopped me out right there. I think this also aligned with the microcycles. If we take a look, this is a clear, let me just go back to here. Come on, yeah, so this is an X, A, M, and D, right? So if you see it, you can't unsee it. I just can't trade without quarterly theory anymore. It's just so clean. But you have to practice, of course. I've been using quarterly theory for like 3 or 4 months, and now I'm in days private mentorship, so it's just getting crazier and crazier. But then afterwards, let's see what this, why I took this trade. So let's just delete this one. We basically just had a bunch of SMTs. We went above the true open on ES. We respected this 50 minutes fair value gap above the true micro session open, and quarterly theory aligned. So that's why I took this little short, but SMT was there and I didn't take profits. So that was a bad monitoring of my trade. Then afterwards, we end up opening in the PM session. This was a trade I took because of, let me see. I don't actually know. I think I accidentally deleted my drawings. But if you just align quarterly tier with it, this is a clear X, an A, then an M, then a D, and the X. So I think this is primarily why I took this trade. I think there was an SMT at the highest right there also. And also just aligning the microcycles, because the microcycle is telling me, okay, we go lower here on the fourth quarter. We do an X, a continuation, right? A, M, D, X. But also if we go on the 5 minute, which we use to look at the 90-minute cycles, which is a cycle above the microcycle, this also told me that we go lower because X, A, M, D, right? So we align two cycles with each other, and then, yeah, after we had an SMT right here, I think, on the Dow or something, then, yeah, after first entry getting respected again, I just enter once I have much confidence that we actually go lower now. So again, didn't saw the SMT, stopped me out at break even again. Ended up being a good trade, but yeah, it is what it is. Monitoring your trades is super important, and that's something I didn't do. So my mistake again. As I said, break even for no reason. ES was just filling a fair value gap right here. So yeah, let's go and go to the next trades. Right now we are in PM session, in the late PM session. This is where I wanted to long, but I was not aligning quarterly theory, and I was actually not looking at the price action. I was kind of in a bad mood after these two break evens. So this is why I took this long, and actually I should have been bearish because I was just bearish the whole day. I don't know why just one big displacement candle and a kind of unicorn entry made me bullish. It made no sense. Afterwards, I saw this really bearish SMT. I think the Dow took out this high, and the quarterly tier was just not aligning. So yeah, this was actually a clean A, M, and we should go lower here. But yeah, I wanted to just take a long for actually not a lot of reasons here. So I got stopped out right there. Then I identified this and took a small short, not really liking this. This was kind of a revenge trade, which ended up being well, so I didn't really deserve this win. But yeah, if we later on look at this price action, you can just see that this is the clear manipulation. We have this SMT, we go above the true open in the manipulation quarter, right? So A, M, D, really, really clean always afterwards. And also, yeah, if you connect the 90-minute cycles of the PM session, you see that we start with an A, then this is the M, and yeah, we should go lower in the distribution. So that was Wednesday, really of a bad trading day, because I think I blew a my funded futures account here, just literally over trading, revenge trading. Not proud of my performance there. And then let's see if there was something else. Let's see. Oh yeah, this was the beautiful trade on Wednesday, which was actually which made the low of the week. So this was the low of the week on Wednesday. Why do you think so? Because there was news. The first news on the week was on Wednesday, so you can expect like the lower high of the week, the manipulation, the distribution to get started right there, right? So let's delete these ugly ass trades. And I said that I missed this SMT right here. If we go back on ES price action, we can take a look at Wednesday. Let me take a look. You see right here, we have a beautiful SMT right here. ES swept the low, NQ didn't. And this is kind of interesting. This is really nice to study this kind of price action, because if you go on Wednesday, I don't have it right here, so I'm just gonna explain it right here. What do we have right here? Let me take a look. Let me play price further. this is crazy. I think this was Nvidia earnings, but I don't really care about all these events. I care about just price action. What happens here is we open news here. I think it is, what news is this? This is Wednesday news, FOMC minutes at 2 p.m. Right? So this is the opening of high impact news event. But also the true open of PM session on Wednesday was right here. Right? So this is the true PM open. This is the high impact news open. What do we have right here? We have SMT. And before you guys say, why the fuck you write down SMT, it's called SMT. Wait for it. I'm gonna explain you guys later. But if you just study this kind of price action, a lot of people, they think, oh, news is at 2 p.m. What are we gonna do? We're gonna sweep the highs and we go lower. What do you think everyone did on Wednesday after they see news pushing above the highs and then displacing lower, disrespecting fair value gap? What do you think everyone did? I think most of the people took a short here. Right here. Don't you think so? And I think that we're gonna go to new lows. I don't know. That's just my opinion. But if you study actually news at like these kind of times, if you just study news, you will see that most likely it will not manipulate right away, right? You have to wait at least like 30 minutes, 1 hour after the news is what I realized to like get the real manipulation. And it's also what they in the mentorship, he confirms that. And so what do we have right here? We have we go below the low, we have kind of accumulation, we form this SMT right here with ES, and then we have the real move, right? This is literally, if you caught this move, look at this. If you caught this move, where is this? Yeah, it's literally the low of the week, right? You caught this and you have a personal account, you've been banking. So I need to study these kind of price action, because this is literally, if you catch these kind of moves in the week, then yeah, you're done, right? So see, SMT right here, below the true open, high impact news, below high impact news. We are bullish because, very importantly, look at the 1 hour. Let me just delete the drawings. Go to the 1 hour on ES. You see this? This is a big ass SMT, right? So you could expect price to already be kind of bullish, right? Big ass SMT on the 1 hour. This is like a really nice big range SMT, which of course holds more power than the low time frame SMTs. Then on the lower time frame, we just have a sweep of the low in the PM session. Sweep of the low. Okay, nice. Maybe this can be a manipulation as well, right? Then on the even lower time frame, we have this small SMT, right? So we have a bigger range SMT. We then have a on the lower, on the mid time frame, we have like just a sweep of a low, and then we have an SMT on the lower time frame, on the 1 minute, right? And where do you end up bouncing from? Let me take a look. Just this 4 hour fair value gap, right? We were still inside this OTE of this big range. No need to actually be bearish, right? Also on ES, let me take a look. We just end up respecting from this rejection block, right? I just learned this week. A rejection block is basically just like a big wick and then the opening price of that candle. Can be used as a point of interest, which I see actually work now a lot of the times. You can also use like the 50% of the wick, but this is called a rejection block. So if you study this and then price went higher, use this nice breaker. And why is this a good breaker? Why do you think this is a good breaker? because it's exactly aligning with the true session open and high impact news. So you see that price uses the high impact news as a true open, right? It's basically like also a way to use a true open is with high impact news. Where do we end up bouncing from? I think on the 1 minute, sorry. Look at this. This 1 minute BPR holds nicely. What else do we got? There was actually, I was right. Look at this. This is actually a really small BPR, which we end up holding. Why? Because everything aligns. We have big range SMT. We have lower range SMT. We are below the true open. We're bullish. We're still inside bullish market structure. We disrespect this 5 minute fair value gap. We then use it. This breaker becomes really, really strong because it's aligning with the true session open and high impact news. So I'm just going to study this. This looks really, really clean. And even more interesting, look, there's even a new week opening gap here aligning with all of this. So yeah, this is precision. Let's say you just caught like a breaker entry here. Stop at the low. Say you just let it run as a swing position at the highs. It's a nice trade, right? This is even like a big wide stop loss. You can even like enter right here if you see price rejecting of this true open. So yeah, whatever. Just study this. This is just beautiful in my opinion. This was the trade you should have taken on Wednesday, but you see after Wednesday I got chopped up. I didn't have any bullets anymore. I blew an account, so I couldn't do anything anymore. But this was beautiful. So yeah, that's Wednesday. Then we go over to Thursday. Let me take a look. Not this one, not this one, this one. Again, here we are bullish now. Why do I switch my buyers to bullish? Because this just looks bullish, right? This is where we end up making the low of the week after these big 1 hour candles and 4 hour candles, and we respect this equilibrium of this range. Yeah, I'm switching my buys to bullish and then take out the highs here, right? These lowest liquidity highs. Not really lowest liquidity, but you get what I mean. It's clean highs to target once we end up bouncing on Wednesday. So I had the bullish buys then starting from Wednesday, going into Thursday. What do we have right here? Again, we align models inside models. We have clean liquidity right here. We have an SMT right here, another SMT right here. We have the quarterly theory aligning with this as well. We have a clear X reversal, A, M, D. Beautiful 90-minute cycles. If we connect the microcycles here, this is when I want to trade, right? This is the New York Open. What happens? We have an A, M, D, X, right? Why is this an A? Why is this not a continuation? Well, because here we just stack up buy side that we are eventually going to take out, right? And this is just a little bit poor price action. I wouldn't say this is like a reversal. No, it's just like it looks like an accumulation, right? So after we see this accumulation and manipulation, and then we see a fair value gap and a change in the state of delivery, right? We actually want to go up. This can be your entry. Target at a 1 hour BPR right here. And yeah, we were below the high impact news. Again, you see, this is where high impact news opened. What we actually did. Again, the same thing like I explained to you like 5 minutes ago. This is usually the move, the remanipulation happens like after the news event, 30 minutes after. Again, here, it happens like this. SMT, SMT. Okay, why should I have taken this entry? Why not? Why not this one? We sweep the low, right? We sweep the low. Yeah, we sweep the low, but where are we? What is time doing? What is time telling us? We are in Q1, right? So until I have more structure and we are in the M or the D, then I can take a trade, right? Because this first bounce is not telling me much. It's a little bit risky trade. So you don't trade Q1. Why you don't trade Q1? Because of this. First fair value gap. You manipulate below the true micro session open. We get an entry below the high impact news, below the true open of the 90-minute cycles, clear down liquidity, everything's good, really nice trade. I end up missing this, but I don't care about these missing. I see everything aligning, and I want to see these things over and over again, so I can later on take these kind of trades, right? So the micro cycle aligned with the 90-minute cycle. This is something I need to always do. I need to align the micro with the 90 minutes for the best type of trades. So you see we end up taking the trade where inside the manipulation of the manipulation, right? Because then you catch literally the bottom, right? We have an XAMD, but here in the M, we also have an M, right? In the microcycle. So you end up taking the trade here. This is the best thing to do, right? Just study this. It's beautiful. I still can't take this trades really confidently, but once I see this over and over again, there's going to be some nice setups that I can finally take. So that was Thursday. Let's say Thursday. Yeah, I don't know what I did here, but we had some SMTs here, SMT here. I took this trade because of, let me see actually, in Q1. So why did I take this? Again, bad decision. I took this trade in Q1. We're actually just still really bullish. We end up respecting in this OTE of this range. So after this displacement, I shouldn't see this as like a market structure shift. This is just price rebalancing itself, and time was not aligning with price, right? We are still inside the distribution. I don't know, I took a short here. So really bad trade. Like SMT doesn't mean anything if it's not aligning with some kind of narrative behind it, right? It needs to have some kind of premise. So this was then some other trades on Thursday. Again, took way too many trades, overtraded here. Not proud of my decisions I made here. But let's see what happens here. Let me delete the other for a second. I was taking this buy model because what do? This is a 50-minute fair value gap. We end up sweeping the sell side. We were still bullish. We were below the true micro session open. We start the sorry, where is the indicator? What? Where is my quarterly theory indicator? Okay, here. So what happens here is this manipulation, it didn't really align with it was in the Q4. So manipulation should not be in the Q4. So that's why this was a bad smart money reversal of the buy model, because time was not really aligning with this. Yes, it could have been a nice trade if you just use price and take an entry here, but take profits once you see price really just having a 3-dive pattern right here. We want to go higher, but we go back again. We want to go higher, but we go back again. This is like showing us weakness, right? And whenever the other cycle starts, so I got stopped out right here, but whenever the other cycle starts, you see here, then we have a clear view of what price wants to do, right? We have an accumulation, a manipulation. Why manipulation? Because we sweep the high, we sweep buy side, we go above the true micro session open. So that's a nice way, a nice place to short. And we have an SMT with Dow. So after that, yeah, the buy should have been short. This was just really a forced market maker buy model because time was not really aligning. Yes, could have taken this trade like this after just, I don't know. Yeah, how could I have even taken this trade? Not really, right? And I took a long again here for no reason. Again, this is just revenge trading. And then, yeah, I caught this one, but then I just spiraled into losses again. So yeah, a lot of lessons learned this week. This was in a macro also, so that's why maybe this was a good trade, good buy model, but I should have seen that the new cycle told me that we want to go lower. Always monitor your trades. That's my lesson also for this week. Monitor your trades. So yeah, that was this on Thursday. What is this? Missed setup Friday. Yeah, let's go to the last day, Friday now. Let's go and take a look on the 15 minutes. So we end up respecting this 50-minute fair value gap. We have an SMT with Dow. We have another SMT with Dow. We have this clean losses liquidity on the lower time frame. So we have the draw on liquidity. We have manipulation. When does the manipulation happen? Super important. Inside of the manipulation quarter, right? So this is a London session. So you can use this bias, of course, to take on with New York, right? So we have an XAMD. Okay, the manipulation tapped the 15-minute fair value gap, formed an SMT, another low time frame SMT. And then, I had a bullish bias, right? Going into the day, taking out this loans liquidity, we were still really, really bullish. We're at all-time highs. I'm not gonna, we're not at all-time highs, but I mean, we are really close to taking out this high. So I thought this was my big external draw on liquidity. And then on the 1 minute, look at this. We have this model, right? I have this buy model. But we still haven't taken out the target, my target of this internal model, which is this. So going in here at pre-market, New York pre-market, I'll have this bullish bias. What do I look for? I look for a continuation trade, right? And so here we form this range. Then we tap the equilibrium of this small range. Then I don't want to just enter right here, right? There's no clean manipulation. I always want to trade after the manipulation, right? So then we have the manipulation, we sweep the low, then we disrespect this fair value gap. We were below the true micro session open, so nice to take longs here. And I think this aligns with the quarterly theory as well. We have an A, yeah, super clean again. A, M, so this is the manipulation. And then, yeah, we go higher. You could take the inverse right here. Market enter once we displace above this fair value gap. We completely disrespect it. And then, yeah, this was a nice trade because the drawn liquidity was so clear. It was these highs. So if I could have taken a trade, it would be this one. The risk to reward is not good, but I mean, you could have had a runner towards the external, right? I don't really care about risk to reward. If I'm confident in taking a trade, I take it, right? Of course, I'm not going to be trading less than 1 hour, but you get what I mean. Really clean setup on Friday. I end up missing. Then we go over to the last trade on Friday, where I just spiraled again. Oh my God, I really need to fix my habits. I really need to, because otherwise I'm just going to keep doing this stupid stuff. I shouldn't do this. I was taking a long right here just because of 1 or 2 confluences. Just literally, we are at all-time highs. Look at this. We took out all-time high, I think. Yeah, we took out all-time high. So we're at new highs. Then I expect, yeah, to just go higher, right? To just go higher because we're bullish. But look at the momentum of these candles. Just look at this. This is what I learned this week. We have this slow grind up, are at new all-time highs. Then this big candle up eventually comes in. Look at the difference between the size of this candle compared to all these candles bringing us above the new highs. This is really showing us that we want to go lower, right? So just by looking at raw price action, just looking what price is actually doing without anything on your chart. Don't draw anything. Just look at what this momentum is looking like. On the 1 hour, we closed really, really bearish, right? The wicks do the damage, the body shows narrative. So after this, I should have been bearish biased. Look at this. Why doesn't it show me? Oh yeah, because I have this. Stupid. But we have also an SMT with ES here at the highs. I didn't see this. So whenever I don't see it, I take stupid trades. Because I thought, oh, this was just a retrace back to equilibrium of this range to then go higher, right? So I took like a stupid inverse right here. Once we have a sweep of a low and we disrespect this fair value gap, I took an inverse right here, targeting the highs. But again, the quarterly theory was not aligning with this. You'll see me keep telling me quarterly theory, but it's literally, it's so overpowered. Why shouldn't I use this? It literally works every time, almost every time, more times than not. So what do we do here? AMDX. Why should I expect the X to go up? Doesn't make sense. We have this really bearish price action on the 50 minute, on the 1 hour, showing us that we actually want to go lower because we have a really big candle downwards. This is not just a retrace, right? And the quarterly theory doesn't align with this. So the good trade here should have been this one. This should have been my target, lows. This should have been the sell side of the curve. Sorry, buy side of the curve. This is the sell side of the curve. So this is so ugly, but I don't care. We are above the true session open, so ideal for taking shorts here. What do? After I got stopped out right here, we have an SMT again here, so this can be another entry. This can be a kind of a protected high. Not really, because this is the manipulation high of the buy model, but you get what I mean. This can be a protected high after we have an SMT. But then the only trade that maybe you could have taken is, okay, we inverse this, we still respect this order block, we again here, again here, again here. This is really when we have a clean fair value gap opening up, and we're still above a true session open. What do we see on price? We have a clear A, then the manipulation just barely went above the true micro session open, right? This is the true micro session open. You see we respect this in the manipulation quarter, respecting this fair value gap. We have this bearish bias stepping from this fair value gap above the true session open, connecting this with the market maker sell model, also seeing that we actually want to go lower after this slow grind up. All of the sell side is creating right here. Low resistance liquidity. Where is this? So yeah, that should have been a nice trade. Now really, I mean, I saw a lot of people taking this trade. Not really my favorite trade, but it's clean because we actually tap from this 5 minute order block. Have a sort of fair value gap on the 1 minute. So yeah, could have been a nice trade, but you get what I mean. I'm just reviewing the week's price action. So I constantly keep reminding myself, okay, why did this happen? Why did this happen? Why did I get stopped out? Why was this a good trade? This is gonna get me to level up in this journey, right? So just keep building experience, keep building your knowledge in the markets. So this was that on the week. So let's get now to the sauce and talk about my lessons from this week. It's a long one. I have so many things I've written down right here. So I'm gonna go quickly over them because my camera is also almost dying and this is also already a long ass video. So I'm just gonna go over them, read them, and explain a little bit. So lessons from this week, February 19th to 23rd. Oh my God. So do not trade Q1. Wait and only trade M and D, manipulation and distribution. Don't fade the cycle. Always use quarterly theory. Then SMT fair value gap is in reaccumulation or redistribution of an existing model is a nice invalidation after a change in the state of delivery. Stop loss should always be at the manipulation high low. So this is the last trade that I showed you on Friday, where we have SMT fair value gap here respecting from the fair value gap, and then we actually displace. That should be a nice entry if everything else aligns, right? Time is a confirmation before entering a trade. I should not hit any button before time is telling me I should. I need SSMT for manipulation confirmation. Use normal ones for extra confirmation. So most of you guys know I'm in Date's private mentorship, and I respect this guy so much. But I'm making these reflection videos for like a long time, and I pay for his stuff. So I respect that he says I shouldn't share this with anyone, but I mean, I'm making these reflection videos. I'm not going to gatekeep anything. I have all respect for that guy. So I'm just going to explain to you what the SSMT means, like really quickly. It basically means that we have an SMT between two quarters. This is called sequential SMT. And so basically is the real SMT. Most likely when you see price reverse, there is an SSMT. So yeah, just so I don't drive you crazy telling you about SSMT over and over again. These are really nice SMTs. So I need SMT for manipulation confirmation, and I can use normal SMTs for extra confirmation, right? So usually price reverses if there's an SMT between 2 quarters on whatever cycle you're looking at, right? Then the Dow is equally as important as ES. I should use the 3 pairs like I explained in the last video. I should check for SMTs between all of them because the Dow, the ES, and Q, these are your 3 weapons when you're trading futures, right? You should not disregard the Dow. Then, don't worry about equal highs, lows. If SMT is present, the liquidity has been taken and the manipulation has happened. I was taking a trade this week I missed a trade this week because we had an SMT, but we didn't take out the equal highs. Well, if there is an SMT, I learned I should not care about anything else. The SMT happened, we have a change in state of delivery. This is telling me price wants to reverse. The market doesn't care anymore about some equal highs left above. So, another lesson. Then, close or take partials if SMT is present, which I didn't do this week, so really big lessons. Always monitor your trades. Then, don't put stop loss to break even for no reason, like I did a lot of times this week. Then I like market enters more than just waiting for a fair value gap. If the order flow is looking good, if we actually want to go higher or lower, depending on my bias, and like the risk to reward is looking good, just market enter. Why should we wait for a fair value gap? And it's not because I'm trying to FOMO. No, if a setup is actually looking good, you should take it, right? Just market enter. If it's a nice target, just enter. Then the hour 4 and the hour 1 are very good bias time frames, like I explained to you on Friday's price action. You can see that the hour 1 just shows you that we really don't want to go higher. The hour 1 and the hour 4 is usually like really the big bias driver for me. The daily is also really nice, but the hour 1 and the hour 4, they tell you so much. So yeah, something to take with me. Trade the high time frame trend until proven otherwise, right? If we're still not below this low, if we're still holding equilibrium, if we're still respecting the fair value gap here on the higher time frames, this fair value gap here, why should you go in a bearish, high time frame bearish if we haven't displaced through this low and respected this fair value gap, for example, right? So yeah, really simple, but I should keep reminding myself of this. Then whenever the A looks like a trending accumulation or orders being built up in the first side of the curve, treat this as an accumulation, even though it looks like a continuation, right? So let's say, let me put on my pad right here. Let's say we have an AMDX. Oh my God, sorry. Let's say we have an AMDX. Why is this an A? I thought this was looking like an X, but now I realize this is actually an A. Why? Because we stack up sell side right here, sell side liquidity. This is most likely going to be an original consolidation of the sell model, right? So this is actually a clear A, then we have the M, then the D, and the X. So this is what I mean with this part. Then monitor the trade to make good decisions and then profit. If you're not monitoring your trade, how are you going to take profits? Sure, you're going to have you can have like a limit target, but I like to monitor my trades to see if price is giving me conflicting bias signs. Let's say a new quarterly theory cycle opens up, it tells me things that are not aligning with my bias, then I should keep note of that, right? So you can only take profits if you monitor your trades. If you see SMT, take profits. If you see fair value gap getting respected, getting a displacement up, if you're short, take profits, right? Then I need to ingrain my plan into my head. This is basically how I trade, and I need to say this over and over again so I know exactly what I need to look for. I know exactly what has to happen first, and it's basically this. I'm just giving you my plan for free. I don't care. This is my reflection video. I just make this for myself. Determine the bias by doing a top-down order flow analysis and knowing why markets move, and form a final bias by attaching quarterly theory and market maker models to it. Then I mark up my key levels in premium and discount, price and time-wise. So this means that my key levels are like order blocks, not really order blocks, most likely BPRs, fair value gaps, new week opening gaps, sell side bias liquidity. Very importantly, I need liquidity to get taken out. And I need to be in discount or premium of the range, whether I'm short or long, but also in premium and discount in regards to time. So this is what I'm talking about, true opens, all that stuff, right? So yeah, premium discount in regards to time and price. Then I remember it needs to be done clear. Forget the maybe this could work setups. If you take a trade because you say, yeah, maybe this looks nice, don't take it, right? Then I wait for the manipulation at my key level. I need to see either a sequential SMT, an AMD, or a stop rate. But the SMT really needs to happen on the bigger range, for example. It doesn't really matter if it's like an AMD on the lower time frame. There needs to be a sequential SMT indicating that we actually want to reverse. And it doesn't matter where it is, if it's on a higher time frame cycle or on a lower time frame, I don't really care. But the manipulation should at least have a sequential SMT, and it can on the lower time frame be like an AMD or a stop rate. Then I wait for a change in the state of delivery. So this can be just an inverse, price disrespecting a fair value gap. And then using it as an inverse, this is for me a CISD, or just price displacing through high, also a CISD. So yeah, this needs to be with a fair value gap, so I really need displacement for this. Then I spot the market, make a model, and align it with quarterly theory. I only trade manipulation and distribution. Then I market enter if there's a good risk to reward, or I set a limit on a PD array, on like a unicorn entry or a fair value gap, BPR, whatever. Then my stop loss should be my invalidation of the model. I need to have a low hanging fruit target, and I can let the runners go if I'm in more contracts, right? If I see SMT, I should take profits. I should trust my framework and only care about that. Don't care about anyone else's analysis. Then quarterly theory is final thing to check before pressing buttons. Time over anything else. You've seen it a lot. I've seen it a lot this week. These setups look good, but if time is not aligning, we're not ready. We should have more structure, and we should be in the manipulation or the distribution quarter for me to take trades, right? Then recognize my mood and behavior regarding my plan. I need to observe it and ask yourself before pushing the button, am I doing the right thing, right? Now, a trade can get invalidated after a new cycle tells you another bias. Therefore, always monitor the trade and only trade manipulation and distribution. Sequential SMT always starts expansion move. Just go back in your charts. You'll see it every time it works. It's literally magic. I'm going to be focusing on max 2 trades a day. The rest is tape reading. I'm going to focus on my track record for now. This is what I realized this week. I'm just doing these challenges, blowing some accounts, and not really taking it seriously when I actually should do. So I think focusing on building a track record is very important if you want to stay in the long run. I'm already like journaling my trades, but I should take it to the next level. I should really just like build a track record, right? Like you see like an equity curve, and you actually are ready for later on getting on investors that actually trust you with big capital, right? So you should focus on a track record and a playbook. So I made like a little playbook yesterday. I already had one, but this is basically what I'm going to be doing. I'm just going to be marking out like what kind of playbook is this. This is, for example, 8:30 news, and I just look at all these trades. And yeah, I built more conviction doing so. Then decisions over anything else. Just focus on decisions and not on passing a challenge, whatever the usual thing. Decisions will make you profitable. Then be more disciplined outside of trading, because I realized this week I have not done a good performance because of that. They should be synced. If your discipline outside of trading is good, it's going to be good in trading as well, in my opinion. Success is taking good decisions, building good habits, building in a routine, and being consistent. It's not about passing a challenge or earning money. Nothing that at all. Then, one day or week doesn't mean anything. I should take profits. Consistent small wins over big winners. Then, you can reduce a lot of stress by trading the 5 minute. Frame a good bias before taking on the 1 minute. So I like the 1 minute for microcycles and aligning it with the higher time frame. But I should only trade this when my higher time frame cycle and my higher time frame like is aligning, right? So that's that. I need to fade ugly SMTs. You saw me on Wednesday or Thursday, I think, drawing a lot of SMTs that are actually not clean. I should just avoid these and only trade clean SMTs, preferably sequential SMTs. And so yeah, I should if there's like a really ugly low and a weird SMT, just don't use it. It should be dumb clear, right? Then I should trust the order flow. I need to check at the closes of the candles. I need to check at the high time frame momentum. What are the wicks doing? What are the bodies telling us, right? The order flow is where I start to form my bias. I'll look at what the market is doing. Is it respecting a fair gap? Is it disrespecting it? Is it sweeping the high? Is it displacing through this low? What is the momentum, the buy momentum compared to the sell momentum? Vice versa. All these things can tell me something just by looking at raw price action so I can form a bias, right? So I need to trust this. This is an example of a trade on Friday. I end up wanting to take a long when actually the price action looks so bearish, right? So the manipulation needs to happen at a place where it's supposed to happen. So where is this? It's at equilibrium. It's after sweeping a low or high if we're short. It's after tapping a fair value gap, right? So manipulation is just not, it should not trust it if it's not at a place where it's supposed to happen, right? Then risk management and taking setups. I mean, why do I do it like a cow? I mean, risk management and taking like setups is the only thing stopping me from becoming profitable. I should take good setups and follow my risk management. I just know it. It's so easy. I know this is going to make me profitable, but it's still so hard to follow your plan. It's so hard to follow your plan. You know, I have this amazing trading plan that everyone likes, but if you're not following it, then there's no point in it, right? You can have a sick strategy, but if you don't follow it, you're not going to be profitable. So then focus on 90 minutes and the microcycles. I'm like a day trader kind of scalper, so I should focus on these. I should not really care now about the weekly cycle, about the daily cycle. These two ones are enough. Then manipulation can just be a sweep of a high or low, but if there's no sequential SMT, it's not confirmed. Again, this is sauce from day. I should actually not tell this, but I mean, I'm doing these reflection videos for so long, I'm not going to gatekeep anything. So for the ones that stick and actually want to learn, yeah, they got some sauce now. Just look for it yourself. It's magic. Then remember, sequential SMT confirms manipulation. You need at least like a bigger range one. But actually the best setups, they form after the high time frame cycle sequential SMT. So let's say this is a daily cycle. There is an SMT on the daily cycle. So between 2 quarters of the daily cycle. So let's say an SMT between an SMT between London and New York. Then we have just a sweep or just no SMT on the 9-minute cycles. But then we have an SMT on the microcycles. This is when we can catch like big moves because we have so many things telling us we have double SMTs, right? And this is something they also told me that you should have like a mid time frame no SMT because 3 sequential SMTs is just not possible. But if you have a high time frame SMT, no mid time frame cycle SMT, but then a lower time frame cycle SMT, that's when you're gonna catch the best trades. Now you can anticipate SMTs by just looking at ranges. So let's say this is NQ and this is ES. Let's say ES is here and NQ is here. What do you expect? You can expect an SMT at lows to getting formed. Why? Because we are in the 4th quarter of this whole range, and here we're not even past 50% of the range, right? So you can expect at the lows SMT to getting formed like this. Right? This is the SMT. So not a lot of people know this, but you can actually anticipate SMTs if you draw out a range and see where prices in the correlated asset pairs relating to one another, right? So you can expect this. This is something I realized this week. It's super helpful to expect SMTs. If you see price really close to a low on NQ, but it's far away from ES, you can expect an SMT, right? So you can prepare for that. Then my camera is gonna die in 2 minutes. Let's just keep forward. I think I'm always done. Yeah, I'm almost done. Now, the opening of price can be used as support of resistance. I think This is about Q1. Yeah. The opening of Q1 can be used as support of resistance. Why did I write Q2? This should be Q1. Okay. So the opening of Q1 can be used as support or resistance. This is also something from quarterly theory. If you see price displacing, we are really bullish and we end up respecting the opening of Q1 of the cycle, can be a nice confluence. Now Q4 is known as reversal. Don't trade Q1, just really obvious, right? But I should really keep note that Q4 is usually like a reversal, so I should expect a reversal. It can also be continuation, but I should be aware of both, right? It's not always a continuation, it can also be reversal. Most likely going to be a reversal. Because you see usually like if we have a move on in New York session, 10:30 to 12 is usually like a reversal. You see it a lot of times. Or it's a continuation. I mean, it doesn't really matter. But time and price needs to align. I realized sequential SMT usually happens at the end of the first quarter of the sequential SMT and the first half of the second quarter of the sequential SMT. Let's say you have Q1. Let's say you have Q2. Sequential SMT is most likely going to happen at the end of this and the beginning of this other one. So same thing. Let's say this is ES and then this is NQ. This is most likely where this is an SMT, right? And these should connect, of course. I don't know why I have a gap between these. But yeah, I realized this. Then time and price needs to align. I realized SMT usually happens at the end of first. Oh my God, I just went over this. I'm sorry. Now, the goal is to catch the manipulation in the distribution or the distribution in the manipulation. This might have sounded weird, but I showed you this on, I think, Thursday's trade. You need to take the trade in the manipulation quarter of the manipulation. Also an option, right? Or in the manipulation of manipulation. So 90-minute cycles manipulation and microcycle manipulation, or manipulation in the higher time frame cycle and distribution of the low time cycle. Just the point of all this is just don't trade Q1 and Q4. Trade cycles into cycles. So let's say Wednesday, New York session, 9 to 10:30. This is Q3 of the weekly cycle. This is Q3 of the daily cycle. This is Q3 of the 90-minute cycles. This is when you should trade, right? Whenever there's manipulation and distribution overlapping with different cycles, right? So my battery just died, but I'm almost done. The final thing I want to say is, man, I just need to take this shit seriously. Why the fuck am I still revenge trading? There's like no way I'm still doing this. I need to be following good risk management. This is the golden rule. I'm just a little bitch, and if nothing changes, nothing changes. If I don't change my behavior, if I don't stop doing these stupid things, then it's not gonna change anything. I'm not hoping for anything. It's not gonna come, because if I'm not gonna change, I'm not gonna change. So if I want to make it in this industry, I need to change my decision making, because decisions is everything. Every decision you make matters. So you see right here on my journal of the week, it's always looking like this. I always start a challenge. I have a nice trade. 2 trades I take here. Another nice trade here on Tuesday. Then I have one little loss. I think this was like $100. It doesn't matter because I'm still up on the week. And then I just spiral back into losses again and again and again. I take this away with me on the next day. I just remember this bad day. I just spiral into losses. This is where I'm at right now. I'm really happy with how I'm viewing the market, on how I'm analyzing the markets. I really think I'm super ready to become profitable really soon. But if I don't change the way how I look at my behavior, the way how I still revenge trade, it's not going to change anything, because risk management is the most important thing. If I should have taken just 2 losses here, I would still be profitable for the week, because that should be $200 loss combined on these. But I just see one loss and I keep over trading. I lost an account here and I started another top step account, and I just breached the, I went over the max daily loss limit. So if I'm not going to change anything, I'm super transparent. This is literally how I'm at. This is how trading works. I'm on the right path, I think, but I need to change my risk management. If I'm not going to change this, I'm not going to change, right? So with that being said, I know we're going to do this. We're going to make this possible. This is just 1 week in the journey. We're going to get there, but please, whatever, if you're watching, keep going, keep being consistent, keep being disciplined. This shit is actually possible. So if we keep believing this and we align our actions with the goal we want, so we actually put in the work, there's no way we're going to fail, man. So I hope you guys have an amazing rest of your Monday, and I look forward to have an amazing new week of trading lessons and setups this week. So see you guys next week. Peace out.